Welcome to the Oxford Space Smart Space Speaker Series. My name is Katerina Maximova, and I will be your moderator today. As a Said Business School alumni and co-convener of the Smart Space Initiative, it is my honor to introduce you to this particular topic. We will be talking about space financing and the role corporate venture capital plays in it. So we are honored to have 4 guest speakers today. We have Sanjeev Gordon, General Partner at Type 1 Ventures. We have Michael Scatolini, Senior Researcher at co-convener of the Oxford Space Initiative. And we have Utkarsh Amitba, PhD scholar, University of Oxford, writer of Harvard Business School, and founder of Network Capital. Welcome. And thank you so much for joining us.
Thank you.
Given the significance of the topic and how we can finance space tech ventures, it will be good if we can start with the introductions. If you could maybe we'll start with Sanjeev. Could you tell us who you are, what you do, and how you come to space?
Sure. So yes, as mentioned, Sanjeev Gordon from Type 1 Ventures. My journey into space was actually quite an interesting one. After having sold my business early on, I then got into the world of wealth management, but very much focused on different structures, pensions, and EIS, SEIS investments within the UK. And in 2016, I was a kind of out networking and met someone who asked if I could look at how we can unlock private pensions for space investments. Me being me, I was like, yep, no worries, we'll do that. Went back to my compliance and they're like, no chance, this is too risky. So then had a lot of conversation, did a lot of diligence to understand what it was exactly. That then led me into kind of this big black hole of space, researching what the opportunities were. We managed to get the pension money unlocked. And then from there, I ended up going into the fund management side with Renewable Ventures. And then in 2021, joining Type 1. So that's my background.
Now, this is wonderful. I feel like we need to have another webinar with you just to learn about the pension funding.
Yeah, exactly. And I will probably mention that later on in some of the points as well.
Absolutely. We'll definitely come back to this.
Yeah.
And Michele, you are not a stranger to the Oxford Smart Space series. Previously, you've been co-convener. But it will be good to give an overview to the group here, who you are, what you do.
Thank you, Katrina. Yes, I'm Michele Scatolini. I'm an associate fellow at Said Business School, and together with Professor Mark Ventresca and Professor Luca Schello, we started the Oxford Space Initiative about 5 years ago. By means of background, I spent most of my career thinking about economic development, firstly with more traditional tools and forms of interventions driven by European Commission, World Bank. And in the last decade, thinking really how about we can leverage on innovation for driving economic growth. And I've moved between the academic sphere and a practitioner sphere. I'm advising a large government agency in the Middle East as well. And in the context of Oxford Space Initiative, my research focus has really been on the formation of the space market, the dynamics that evolve around these emerging technologies and how entrepreneurs and governments shape markets along with corporates in the space sector. In particular, I've been leading research on the UK space ecosystem, looking at how the UK government has been driving rules, resources, relation to shape the sector. Similar exercise we've done in the context of the UAE space economy. And more recently, for the Italian Institute of Geopolitical Studies, we've run a compared analysis between the Italian space ecosystem and the UAE one. So very excited to look at this, at the conversation with you, and in particular, some of the aspects we've deepened on the role of corporate venture capital as a form of intervention in the sector.
No, this is brilliant. Again, I feel like we need a 1 hour with individually one of you to cover all the interesting topics. And Utkarsh, you recently started a PhD, right?
Yes.
With the University of Oxford. Could you tell us how did you get into the space? Because you had quite a journey to get here.
Yes, I did my master's in moral philosophy here at Oxford, MBA from INSEAD, and then decided to do a PhD here. I'm an entrepreneur. I founded Network Capital. I really love to write, and I'm a student of popular culture. I write for Harvard Business Review, the World Economic Forum, and so forth. But my interest in space essentially stems from understanding social networks and how industries develop, and how different entrepreneurs and investors are essentially trying to build their category of one uh, in the remit of space. And space is everywhere. I mean, we're going to talk about the economic implications, but I want to take a second to talk about the cultural implications. Think about famous songs like The Rocket Man by Elton John, famous shows, Big Bang Theory, books, Hitchhiker's Guide to the Galaxy. So we've been fascinated by space ever since. And now it's the convergence of multiple things that have made my interest fructify, hopefully, into a solid doctoral work. But today I come to this discussion more as a person who's fascinated by what's happening in the industry, how it's shaping popular culture, and how different kind of financial instruments are becoming part of this industry formation that is taking place. We're also going to briefly talk about how different countries can collaborate and compete to shape the new normal. And I'm really excited for the questions and so forth.
No, brilliant. And it's always hard when you have a little one in the background. So it's a new, I guess, the new space entrepreneur who's joining us. That's wonderful. I think today will be quite a full-on topic, and I don't know if we have enough time to cover everything, but we'll try our best. So let's start with just taking a step back, because I would imagine a few members of the audience haven't been across the space technology or understand what the space economy is. And personally myself, it's a new journey that I only immersed in just a couple of years ago. So the quote that I came across back in the day by Paul Godfrey, when he refers to the space domain and how it referred to as critical, competed, contested, and congested. And these 4 words means a lot to the people who are actually in the industry itself, who understand the space technology and how complicated it is. But if we jump in and try to understand what space is and what space economy is and how it affects our day-to-day life, we might take a look at the UK Space Agency infographics. The slide, if we could share it quickly, that will be helpful. So we all know that, or we might have heard that space economy today is around 600 billion, and the expectation it will grow by 2035 to 1.8 trillion. This is great, but what actually it means for our day-to-day activities and how space matters. So UK is actually announced that the space considered to be in national critical infrastructure. Almost 18% of the UK GDP dependent on the satellite services. And it is a big figure, but how does that actually compare to the day-to-day activities? So space satellites or satellite services are used across multiple sectors, including logistics, transport, energy, banking, security and defense, which is obvious, weather forecasting, emergency services. And that's just to name a few. Of course, there's a number of innovation and technology that comes from the space engineering and research that also contribute to our day-to-day activities. On top of that, the space economy in general, year on year, technically outpaces the growth of the wider economy by 5%. And if we look at the United Nations Sustainable Development Goals, which are currently 17, majority of them are directly dependent on the space technology. So if you look on a bigger picture, space is all around us, and financing it and looking how we can support it, it is critical. So let's jump back straight to the questions, because the topic today is the rise of corporate venture capital and the role of financing, or how we can finance the space technology. So the first question, Sanjeev, is for you. Given that you are in the venture capital and also knowing that you're currently dialing from US, maybe you can give us a little bit of snapshot what you're doing this week, if you can.
Yeah, absolutely. So very fortunate to be here in Cape Canaveral. Yesterday evening, we saw the launch of one of our portfolio companies, on its way to the moon surface, conducting several different research projects and also looking at exploring the south side of the lunar surface. So yeah, that's kind of this week is that's where I kind of am at the moment. Been really fascinating to really start seeing the reality of what this looks like, because for so long it's just been decks and PowerPoints and meetings, but actually all the work that's going on is now coming to fruition. And with this mission, which is actually going to be one of the first commercial rovers on the lunar surface, we're seeing where opportunities are really coming in, whether it is looking at the oils and lubricants market and what they're trying to do in terms of research and learn from the lunar surface to again be applied here terrestrially. Looking at connectivity, how we can again bring the connectivity, and there should be a, if all successful, a phone call from the lunar surface coming back to Earth. So we'll understand exactly what happens there and how we can again apply that back terrestrially to strengthen our networks and connectivity, as well as a few others which will be announced over the coming weeks that will be quite interesting.
This is brilliant. Sounds like you're already thinking about the moon and the lunar surface and how we can build infrastructure there.
Exactly. And I think one of the, sorry, before we jump off, like one of the points on this is you mentioned some really interesting opportunities within space, and a lot of it isn't just space for the sake of space. There is aspects of that, but it's actually space for humanity. It is how those different industries and how those different applications in space are really impacting us here and actually making things work better for us on our planet.
Absolutely. And I guess that's one of the reasons why, let's say, corporate venture capital would be interested to look into the space. But we'll get to that. I think maybe if we step back, could you tell us a little bit about the key emerging trends you're currently observing in the kind of space tech investment and what, let's say, Type 1 Ventures looking at the moment?
Sure. So I mentioned my first kind of look into space was starting in 2016. At that point, it was very much around downstream data, looking at Earth observation for agriculture, forestry, looking at how we monitor infrastructure on dams, mining, etc. What we have seen probably more so since 2020 onwards is a resurgence again of more upstream opportunities. With that, I think a big part, and something I'm very keen on and have placed a few investments in, is in space manufacturing. How do we utilize the natural environment of space to better produce different types of materials that we produce here on Earth, or a step further, produce materials that we cannot produce on Earth due to our natural environment here? This is a really interesting part, because actually what we're doing and what we have seen from the research is we can make advanced materials in space that will increase the efficiency of key infrastructure, whether it is telecoms, whether it's data centers and semiconductor chips and computing power, whether it is pharmaceuticals, etc. All of this to actually then reduce the amount of energy consumption or reduce the amount of kind of carbon emissions being put out into the atmosphere by making that here terrestrially and utilizing the natural environment of space. And the reason why this is a really interesting time for in-space manufacturing is because we've got to a stage where the cost of launch has actually made this more feasible. So back in the day, we were talking kind of $50,000 per kg to launch. Now we're talking to kind of between 3,000, 1,500, with a trajectory of getting to $300 per kg. So all of a sudden, it's actually cheaper and more carbon efficient to launch a satellite, create the material, bring that back, than it is to actually set up a clean room, and the infrastructure required to make that material here. So that's one of the big areas that I'm looking at, and that we have invested in multiple plays on that side. The other is in-space infrastructure and satellite servicing. So with the requirements of connectivity and all the other aspects of what we will be using space for, we're going to see the number of satellites that go from 8,000 plus that we've launched to date to 100,000 trajectory by the end of 2030. So with that in mind, what we want to start seeing is how do we ensure we can maintain and refuel and keep those satellites in service for longer, so that we don't have to keep launching new ones, and we can actually better manage the infrastructure that's in space. So looking at things in ways in which we can refuel, extend life cycles of those, looking at ways in which we could potentially repair and service where there may be some damage or where there may have been some loss in operations, will enable us to have to launch less eventually, but actually keep them going for longer with better equipment. So those are two aspects. And then I also mentioned the lunar economy as well, which is a big area of, for us.
Mm-hmm. No, this is super interesting. And I guess as well, with this new technology coming in, one of the bigger, similar to the clean tech and green tech, one of the main things is to make sure that this technology also is applied and used by the bigger corporate companies. So I know that corporate venture capital could be one of the solutions. And I don't know if you could just give us a bit of background and maybe the role that corporate venture capital plays when it comes to, let's say, space technology. And perhaps provide some examples, because I know you've been working with a few interesting companies, in the automotive industry.
Yeah, absolutely. So CVC, in essence, is normally a investment arm of a corporate that is investing in different companies and activities that can be either part of the corporate's portfolio and activities, or it can be done as a balance sheet investment for a financial reason. So in essence, that's what it is. Most of the time, CVCs are literally like a separate department. So the same way that you may have the engineering team and engineering department, marketing department, you will have a CVC team / department. Now, as you mentioned, one of our first conversations was around the CVC side, because I've been seeing a lot of work on that side in UK and European market. And the way I categorize CVCs, especially the ones that I've been working with, is on a scale. One end of the scale is CVCs that are more strategic. They're investing solely in projects that are aligned to what their business units are doing or what their core activities are. On the other end are CVCs that have been set up for financial return. So they're not just looking at something that is strategic to them, but they're looking at this is actually a sound investment in its own right, and something that they want to invest in to be able to return capital outside of their core activities and diversify their portfolio. So those are the two spectrums. There's all sorts in between there, and different companies, corporates, are approaching the market very differently on what they want to see. A lot of the times, and I'm going to go into some of the examples, a lot of the times you see something like an automotive company that is looking at investing in technologies, especially linked to space, that will improve the connectivity aspect or the autonomous driving aspect of their vehicles. That's where it gets really interesting, because not only can a CVC provide the investment, or the CVC arm provide the investment, they also then have the inroads with the research and innovation teams to be able to test and pilot test the different types of innovation, which eventually leads to potential contracts there as well. So from my side, CVCs are really interesting to bring in at the right round. You wouldn't be looking at bringing in CVCs at kind of seed, maybe not even Series A, but from there onwards, you start looking at those investors and getting them involved, because there's good opportunities for you to be able to get into commercial contracts as well. So yeah, those are the examples that I would use based on some of the investments that we've seen just over the last couple of months.
No, this is actually brilliant. If you think about the CVC as well, right, they are more or less patient investor, right? They can spend time and help the startups to grow and also test some of the technology, which often is a bit difficult. And now I was thinking like maybe a good pivot to Michele and your research on the corporate venture capital, because outside the automotive industry, there's other sectors that are quite interested in space tech at the moment through Earth observation or perhaps insurance. Would you be able to give us a little bit of color and add some examples? That would be great.
Sure. And look, Sanjeev, like everything that you just mentioned resonates a lot with the data points that we have. Our starting point was like a piece of research we called Pathways to Space. We looked at how different types of firms engage in the space sector, and in particular how they are shaping it. And within this, we looked at the strategies of aerospace incumbent firms. We looked at the strategies of what we call the new contemporary space ventures like SpaceX. We looked at startups. We looked also at the investments from corporate players that are outside the aerospace industry. And so like we've identified many strategies, some of them more traditional ones, M&A, leveraging on core assets, and also novel forms of intervention models that are more innovative, like incubators, accelerators, and in particular, we came also across CVCs. And CVCs have been, based on our data, deployed both by and largely by aerospace incumbents firm, and then more surprisingly for us at that point, even by a lot of firms from terrestrial industries. So we double-clicked on that. We looked at some data series about investments. We found approximately 1,200 investments in space tech companies deployed by more than 800 CVCs. And interestingly enough, beyond like the concentration of CVC investments on behalf of aerospace incumbent firms like Lockheed, Boeing, and the others, we found that the majority overall of these investments were made by firms outside the aerospace sector. And look, just to have a view of what that looks like within those like hundreds of investments, there are investments of banks and like Intesa Sanpaolo or SMBC, but also to Sanjeev's point.
We're just going to jump in. Michele, there might be a little bit of a struggle with the audio. Could you hear us?
Let me.
Oh, yes, you're back.
Okay, I'm back. Look,
you're back. Perfect.
Thank you for the heads up. To Sanjeev's point,
just to let everyone know, Michele, sorry, you joined in from UAE, so you're probably a few hours ahead. So I don't know if you're using Starlink or other space tech. So I appreciate you joining as well. Thank you.
Thank you. No, indeed, we found this variance of types of firms. We have banks, we have automotive firms, we have insurance companies, we have also asset managers or investment funds. So within that, then there is really a variety of motives, and maybe we'll talk a bit about that later. But really interesting to see that. CVC arms, traditionally more common in other emerging technology sectors, are now being deployed heavily in the space sector as well, for a variety of motives, as Sergio said.
No, absolutely. And to be honest, if you think about the CVC and automotive industry, in a way, any technology that comes through, it will be easier to implement, where space tech is a little bit uncertain. There's still almost like education that is missing for the companies to understand how they can use it and how they can utilize the space tech. I know you have previously worked or have been across the Orbit Fab and I guess the connection to the Munich Re, the insurance. Would you be able to talk a little bit about it, just as an example, how insurance companies could be using
I think this is
data?
So look, we look at I have like some samples of these CVC investments that were made. And there's more different motives for which this happens. When we look, and we are yet to engage in with the CVC arms and really ask them the reason for these investments. So my answer are going to be a bit speculative at this point, but we were really interested in seeing that Munich Re, one of the largest reinsurance companies, invested in Orbit Fab. So this is a company that provides satellite refueling technologies. So we can speculate here that Munich Re is looking to engage in the changing nature of the satellite market. How do the risks and the parameters of reinsurance change if satellite lifetime also changes? So we think this is really an interesting way for Munich Re to engage in the changing nature of the market and position itself as one of the future reinsurance players in an industry that evolves over time.
No, exactly. And there's a lot of, I guess, the research is not quite done on CVC. So I'm sure we'll come back to it and maybe publish a few papers and actually collaborate with you, Sanjeev, at some point. Utkarsh, you are currently doing your research. And I wonder if you could touch base and give us an overview of what you've seen in the market, especially the history of the space financing, because that is quite an interesting point, how it evolved over the years.
Yeah. So again, like storytelling aspect and narrative aspect of space has been huge. So if you go back to the history of space development and how the industry started to mature, storytelling had a huge role to play in it. And initially, it was basically government funded, and it was a competition between the US and the Soviet Union largely. And for many decades, it remained as such, that we assumed that all of the investments in the space are going to come from a government expenditure. But now what we're seeing is the emergence of venture capital funds, the emergence of new investment vehicles like SPACs, and even companies like ARK Invest have actually set up what you call an index fund, which is entirely tracking how the industry is going to evolve. So what we need to do is to essentially keep our minds open to the spectrum of possibilities that'll emerge and the new investment vehicles that can come to fore.
Thank you so much, Utkarsh. I really appreciate it. We might come back to you in terms of the topics of the research, because you're also looking at the emerging economies and how space could actually, collaboration between government agencies can actually help. So I appreciated that. Sanjeev, while we have you here, could you tell us a little bit more about the kind of not only the role of space CVC, but also what do you think the most unusual collaboration between the corporates and the space technology that might come up in the next 5 years? Because I know that some of the companies you are invested at the moment have incredible potential, things that we haven't seen yet, but investors could be interested in. And I think you might be unmuted at the moment. You're back.
So yes, can you hear me? Yeah,
Yes.
brilliant. So yes. First of all, I'm going to touch on some of the points that were just being made earlier on with regards to the initial space race, which was very much driven by government to be able to show sovereign strength in the exploration of space. And then we saw, as there was more collaboration between Russia, the US, who were the two main powers, we started seeing budgets dwindling, and that drive and passion to compete to get the next stage of innovation started to move away. What we have then seen is the rise of private capital coming into this market, and the private capital is coming into the market in a way in which it's now becoming more commercial. So there is opportunity here, but that private capital needs to be invested in a way in which it has a return to its end investors, rather than coming at it from a sovereign perspective, where it initially did with the first space race. That then has seen the competition increase for the space domain, and then that's what's had led to the decrease in cost of launch. So I think that's a really interesting area in terms of the shift from government driven to now government supported. So it's not like it's just commercial, because a lot of the times your first contracts and the first tests are being done in support of or with the commercial opportunity. And I'll give you an example of that, as you asked. This is looking at how we can manufacture advanced materials for 5G towers, and it's an agreement between the UK government, one of the big telecoms companies, and a startup. And the reason why that's worked really well is because the UK government has been able to step in and show or slightly manage the risk for the corporate to be able to take on that type of a collaboration, which typically might be too early on for someone of that type of size of corporate to do. So those are going to be some really interesting areas in which it's government supported commercial opportunities with corporates and the startups as well. One of the things that I think we're going to be we're seeing more of in the next 4 or 5 years, because the example that I gave you there is happening now. That's already through. But over the next, like you said, 4 or 5 years onwards, what's that going to look like? And it's going to be a matter of looking at how do we increase the type of different types of pharmaceuticals that we can make in space to better impact us again as humans and how we live here on Earth. There's a lot of research that's gone on, but there's not been as much commercial contract opportunities yet. And I think we're at the cusp of seeing that change, and we will probably see that scale quite drastically within the next 5 years.
And I guess one of the main aspects or the reasons for some delays or in terms of the commercial contracts coming through for pharmaceutical or drug manufacturing, the issue was with bringing the, I guess, the products back to Earth, right? There wasn't viable option, but it's changing.
Yeah, exactly that. There's two aspects to it. So one, and this we've had extensive conversation with a couple of big pharma companies. So yes, the returnability aspect is huge, and then the other part of it is scale, because once you have formulated a drug for the market, you can't chop and change that. So you need to ensure the supply for that particular drug before you then go out, get the patents in, get all of the kind of infrastructure set around being able to get that drug out. So some of the big pharma companies have been hesitant in not the research. The research has been happening for a while, but hesitant in the actual manufacturing because of scale. And now we're seeing that hurdle being managed very well. That's being managed because we are able to have more flights happening. Just yesterday alone, between 7 p.m. and 11, we saw 2 rocket launches. So we're seeing the cadence of that go up. And with that, we are going to be able to see the opportunity for free flying satellites that will be producing and returning, as well as space infrastructure, which is commercial space stations that will be able to manufacture at scale with the returnable aspect as well.
Of course. And to be honest, it's an interesting time and space to be at the moment, because given another 5-10 years, as I think it was in the McKinsey or Deloitte or PwC mentioning that if you don't have space strategy, you're already late, right? In terms of the
Exactly.
Yeah. And from your perspective, being part of the venture capital firm, how do you find the collaboration with CVC? Do you have to provide an aspect of educating them, showcasing them what the startups are doing, to also help startups to fundraise Series A, B, and look further?
Yeah, so it's a really interesting job for good VCs, which is to play the strategic middle ground between the corporates, the CVCs, and the startups. Because one, it's very time intensive. Corporates, due to the nature of the business, can't move as fast. So it takes time to educate them, to get them to understand what's happening overall. It takes a lot of hand-holding, especially for those who are coming into the space market quite new. So if we're investing in a company, we don't want them to be utilizing all of their resource in those early on. So we will sometimes play that role between the two. We will help educate the market. And I think Type 1 is probably quite unique in that sense, that we regularly bring together stakeholders, which includes the CVCs, into strategic discussions to understand how do we reduce the timeline for innovation within the big corporates? How do we utilize the CVC structures to be the catalyst for that in some cases? And what do those corporates require with regards to governance and procedure to be able to work with some of those startups? So all of those things take a lot of time and education. But like you said, most of the companies we speak to are very much coming around to the thought that we can't be left out of this. And we as in corporates need to be working with investors to better understand the market and rely on some of the specialist space investors to look at the diligence. The other thing that I would note is, which is something that I'm seeing as a bit of a trend, is the reliance or the kind of increase in CVC activity within UK, Europe versus US. In US, you've still got a lot of venture capital and financial investment firms looking at those deals right up to kind of B onwards, etc. In the UK, there is a big gap at the post-seed to B stage. So a lot of those companies are now having to rely on, and corporate venture capital is plugging a gap that is in the market there. So that's also quite an interesting kind of observation that we've been able to see, because we operate across those markets. We have our main office in the US, we're a US domiciled fund, but we operate across UK, Europe, Middle East as well. So seeing the difference there, where CVCs are plugging potential gaps in the market, is quite interesting.
No, that is fascinating. Even though space is quite broad, different regions look at it completely, approach it from different perspectives. I know, Michele, you're currently based in UAE, right? And one of the hats or the roles you currently have is the head of innovation and building kind of ecosystems, right? Within this space technology and startups, how do you think it's critical to build the ecosystem between the investors, let's say CVC, the startups? What do you see at the moment in the market?
I mean, this is entirely critical, and it's important, to take, when we talk about ecosystems and the growth of ecosystem, it's really important to understand who are the actors involved in that process and how they relate to each other. And so there's a couple of frameworks that we always use at Oxford to look at these. And what we observe generally in the growth of this ecosystem is the interplay between public and private sector, which goes hand in hand. If we think about the role of government, very often they enter in setting up the rules of the game. This has the virtue of bringing clarity, which brings in investors, brings in risk capital as well. But then at some point there is also the entrance of the private sector, very often in collaboration with government agencies giving public contracts. Aerospace firm enter the sector, but then those bring along innovators, startups, and academia as well in this process. And then within this ecosystem, there is always a central role played by a form of intermediary. It can be either a government agency or a private sector agency that brings together all the parties. In the UK, this has been done extremely well, for example, by the Satellite Applications Catapult in the very first year of formation of the market. They brought together stakeholders, broker deals between demand and supply. And in some markets, these roles are vacant. So that's where there's really probably opportunities to accelerate the formation of the sector by bringing together the different stakeholders in a very intentional way. Look, I'll link a bit on the trends on CVCs as well. Indeed, I think there are regions where CVC is more mature, where CVC is nascent and growing, and regions where, like in the Middle East, where it is really new, but where there is a lot of capital being deployed at the moment. Maybe not increasingly in the space sector, but in more traditional industries like financial services. There have been large investment pledges by CVCs, and I expect to see more and more happening into space. Saudi obviously has made strong aspirations and commitments, as well as the UAE in this sector, and investment funds are being earmarked for these purposes.
Now, this is brilliant, because one thing is to have startups, VCs, and CVCs, but then down the line, you actually want to have a more patient investor with a long-term horizon that can invest and sit and see the technology developing and being applied across different sectors and industries. And the role of government and corporates is quite critical. Utkarsh, you were talking about your research, and I don't know if it's a good time to continue. Wonderful. You were mentioning that the way we finance space back in the day and how we do now has changed. Could you just jump in back and elaborate on this?
I do want to emphasize a couple of numbers that we should keep in mind. That recently the World Economic Forum and McKinsey partnered to publish a report that said that by 2035 the sector is going to be worth $1.8 trillion. And I really enjoyed reading the report, not because the number is accurate. It could be a lot more. It could be a bit less, but because a lot can be learned by thinking about the history and the development of the space industry, and comparing it with how internet began. Internet also was a government-funded product. The Department of Defense in the US had a lot to do with it. And at the time it came to fore, we didn't really understand the multiple use cases, the way internet would become a platform for different kinds of innovation and challenges. So I started studying companies, still early stages of my research, and ultimately, even in space technology, we are constantly talking about the importance of having a longer time horizon. That's true, but that's the tension. Venture capitalists often cannot wait for, say, 25, 30 years to get an exit. So ultimately, you'll see new business models emerge, and it doesn't need to be all grand or launching of a satellite or doing stuff. It'll be interesting use cases. There's a company called Pixel in India which I did a deep dive on. And I understood that the way they are actually looking at allocating capital from the funds that they've raised is to generate new business now. Like looking at data, looking at what kind of data can they collect, analyze, and platformize that in the entire approach. When I worked at Microsoft, one of the projects that we worked on was enabling smart villages in digitally disconnected areas. At the time, we were looking at television white space technology, and this is the pre-SpaceX and Rocket Lab era. And that worked well. But now, thanks to the new developments and the energy that has been added by by this ecosystem that is being formed, that these white space technologies have paved way for new scalable interventions that can come to fore. And I'm actually really interested in seeing how people like regular folks who are deeply interested in the sector will now be able to put their money where their interest is. I see, or it is fairly likely that there'll be a lot more companies going public. There'll be a lot, or likely to be a lot more M&A activity. What did SpaceX do? One of the things that it has done is that it has become like a vertically integrated company. Just a few years back, there would be companies that will be specifically focused on launch, specifically focused on different aspects of it. And this company is trying to, take the vertically integrated approach. Perhaps they would set up, some version of an investment arm. Perhaps they would try and do a lot of M&A activities. Hard to predict, but instead of focusing on a company, we can look at the trends that are emerging in the industry. So let me conclude by saying, fundamentally, even with space, we need to change our horizon. It won't be all grand. It doesn't need to be platform-based interventions will be the key. So second would be, yes, the timeframes are going to be long, but investors normally can't wait that long. So instead of saying that, hey, let's look at our return on investment in 25 years, it is possible that at least a good chunk of them would expect returns sooner, and the market could deliver. We'll see. And the market also punishes. We've seen what happened with Virgin Galactic when it promises and under-delivered. And lastly, I feel that there is a lot of learning that all of us have to do, like us meaning the people who actually deploy capital, not researchers necessarily, where we have to learn about what didn't work with SPACs. Why are certain companies reaching the stage there is? There is a lot of fascination with looking at different aspects of it. But I would just like to conclude by saying that launch as a sector is not big enough to to fuel our ambitions for the broader ecosystem, and we should we should perhaps look differently at our approach.
No, absolutely. And I guess VC would think that launch is not the place where you want to put your money at the moment. Cannot compete with a Starship.
What are we? Sorry,
Go
I'd
ahead.
like there was a I was gonna have add a couple of points on that as well, because yes, there is aspects, and we did a study recently with Deloitte to release a kind of a collection of thoughts from stakeholders that we've been working with. And in there, we've also got a time horizon for different particular verticals within space and where we think the initial innovation is going right through to commercial. And you're right, where there is longer time horizons for something like asteroid mining or infrastructure on the lunar surface, etc. But I also think on the other side of the spectrum, where we are looking at in-space infrastructure, in-space manufacturing, it's happening a lot sooner than people realize. That time horizon between initial kind of ideation through to launch is now getting down to a stage of 2-3 years max, where you can actually have space heritage. You can get something launched within $500,000 where it's actually build a platform and paying for launch. And we're seeing this because we've invested firsthand in some of the companies that have had to get it through that quickly. Now that then makes our job as VCs very interesting because we're going to have a portfolio in which some of those particular verticals are going to be delivering within 3, 4 years, 5 years. Some of those are going to be the ones that are taking more time, a longer time horizon. So when we're thinking about it from a portfolio construction perspective, we are able to match that entire portfolio and think about the different time horizons whilst also considering how we look at financing differently, where we may invest in the fund, we then may look at secondaries and partial exits in which that side of the market is picking back up again.
Mm-hmm. Absolutely. And even thinking about the startups, back in the day, maybe 5 years from now, right? Thinking about having a sample launched into orbit would take at least a year, 2, maybe more. Nowadays, as soon as you get a capital in, you literally can book a spot and ready to go for testing. Incredible.
Yeah.
But given the time frame, we also want to leave some space and time for the questions from the audience. Just in a couple of words from all the speakers. Question, where do you want space to be in the next 5 years? And obviously, with that comes the challenges and how we can prevent them. So in a way, where do you want space to be, how it might look like, and how we can prevent or overcome some challenges? Sanjeev, I might start with you.
Yeah, sure. For us, and we've had this discussion internally within Type 1 where we talk about strategy. Within 5 years, I don't want to see us having to be a space-focused fund. I want space innovation, space technology to be a part of a deep tech strategy overall, because we're just going to be utilizing space as a domain in terms of an environment or type of innovation that's actually benefiting other verticals. So in that period of time, will we still see specialist space investors? Hopefully not, because it will just be a part of other verticals.
This is brilliant. And actually, I think, if I'm not mistaken, the way US and UK looks at the space technology is quite different. Because I think UK at the moment looks at the space as critical infrastructure, where US is it's across everything. We cannot separate it in a silo.
Exactly. And like we've not even touched into defense and all those areas, because that's a huge, massive area where we're seeing more CVC activity, because we need to look at different innovative ways to be able to, in essence, defend our nations. We are looking at we're kind of seeing the opportunities here of utilizing satellites to be able to better protect and defend our nations as well. So that's a whole different area which we could do a separate call on entirely. But yes, that's what I mean by it's not space shouldn't be or in 5 years time it shouldn't be its own sector. It should be across multiple different sectors.
Absolutely. Michele, you had a point?
I'll borrow a quote from one of our colleagues at Site Business School, David Lehman, who said, like, space is the new digital. I think this is a good analogy of what Sanjeev said. Like this space becomes horizontal to all the industries on Earth, improving their performance, enabling business model innovation, enabling service innovation, enabling to do completely new things that were not possible only on Earth-based industries. Within that, we would like to see like really Earth observation and geospatial having an impact on sustainability challenges that our planet are facing, climate change, coastal erosion, just to name but a few. So I think in the short term would be great to see both financial returns, but also some form of impact on these say sustainability challenges.
Absolutely. And I guess financing this will be one of the bigger challenges we need to overcome. And Utkarsh, from your side.
Yeah, I have 3 hopes rather than predictions. One is for space to become more inclusive. I think there's a lot of work to be done to make it more welcoming for all genders, cultures, and convictions. Second is that I hope that SHAPE provides, the space industry provides way for a new foreign policy, nations collaborating and competing together, which will be interesting to see rather than, playing finite games with each other. I also look forward to a lot more liberal arts people getting involved in the space ecosystem, so to speak. For a very long time, when we think of space, we think of rocket scientists and people doing technical things. And of course, that's very important. But we do need people to really broaden the horizon and ask questions and look at some of the most fundamental challenges that can be solved and where space technology would be particularly useful. I'm actually really hopeful about the capital that will flow. That seems likely. But I think if we can manage the inclusion aspect of it, the way we tell our stories, and the way we enable people from different backgrounds to get involved, that could make this the space of space even more interesting.
This is wonderful to even the conclusion, the end of the whole conversation, starting from finance, ending on the social science, and bringing everyone together, because space is just around us, right? We can't miss that. But given the 8 minutes left, just wanted to ask the audience if you wanted to put some questions that will be very helpful to our speakers. I know there are probably a few questions on the defense. Sanjeev, you just dropped an idea, and some questions will probably come up.
So some of the questions that are here, Katrina, which we can take, what are the emerging platform-based interventions in space tech that are emerging across launch, operations, and decommissioning?
Perfect. Sanjeev, do you think you would be the right person to tackle it?
Platforms-based innovations and space tech. Brilliant. So the decommissioning of the International Space Station is already been awarded. There's an interesting talk around when that timeline is going to be. Officially, it's 2030. We think it may be happening sooner, and that is SpaceX looking at the decommissioning of that. Looking at the other platforms here, so interventions in space tech across launch and operations and decommissioning. Looking at the other side of it, which is the returnability of satellites. If we can now start to launch satellites with the applicability or the ability to return and reuse, we're going to see something very similar to what's happened in the launch side, where costs have come down. We're not going to leave as much debris up there, and we're going to be able to manage that much better.
Brilliant. And then we have a question as well from Mark Ventresca. Are CVC entities bringing novel approaches to investment in space? And what are the major trends between 2025 and 2030? I know, Sanjeev, you did touch a little bit on the different sectors and the CVCs and the companies involved. Michele, if you had anything to add as well.
I would say indeed most of the investments that we have documented are later stage investments. And when it comes to the motives, I think we touched upon it earlier before. Now we can see strategic investments close to the core of the business. Just to give a couple of examples, we've seen like an engineering firm like Schlumberger investing in GHG SAT. This is a form of service innovation for them. We've seen Standard & Poor's investing as well in Earth observation companies to provide better and real-time access to data for better rating providing better rating. So that's one form. One other interesting investment we have observed is, for example, Franklin Templeton investing in Varda Space Industries, one of the companies investing in pharmaceutical development in space. So that we wonder if that is, and we're yet to talk to Franklin Templeton and understand the rationale of that investments, but that seems to be more speculative. They seem to have a thesis around the market potential of this area and making a strategic investment that is eager to ripe returns. And then there was the other category, that we said earlier, Munich Re investing in Orbit Fab and rethinking about the future of insurance in space and the new markets that are forming. So I think motives and the risk profiles attached to each of these will be very different. What's equally important is that we observe some of these CVCs working together with firms that can do scouting, that can run incubators, accelerators, that can provide deal flow to them, when in the case that they don't have internal capacity. And I think that's a question of location of the CVC, of the maturity that they have from investing in other sectors, and whether they need to partner with other complementers to bring in-house those capabilities.
No, thank you so much. Sanjeev, you wanted to add something? Thank you, Anit.
Yeah. Yeah, just to add to that, the incubators are a really interesting strategy with CVCs. The incubators tend to sit between CVCs and innovation teams. So that works really well because it's a way of the startups being introduced to the corporate ecosystem early on and being able to have those conversations in a safe space as well. So I quite like those types, and we have already from our portfolio seen some really good advantages and benefits from that type of relationship early on. The other thing I would add there is looking at the novel ways, and I don't know it's so much of a novel way, but what again a trend we have seen is going back probably 4 or 5 years. When a CVC invested, there was all sorts of exclusivities in that investment. So if you took an investment from an Airbus, you were restricted with regards to Boeing or any of the other primes. If you took it from Shell, you'd be restricted. We're seeing the corporates move away from that and actually assess them on the basis of being able to, yes, make a strategic investment, but also look at it as how will this service the market? That then, as a financial investor, gives us more comfort when going into those deals. So we don't feel like our upside is limited because there's a CVC. So all of a sudden, it makes the relationship between a CVC and a venture fund more harmonious because we don't have that limitation.
Brilliant. And Utkarsh, you wanted to add something?
In the interest of time, I'd like to say that in Oxford, the number of people studying space include anthropologists, of course, management scholars. There are people in the astrophysics department, and this is just one university. And now people have the opportunity to connect and collaborate thanks to new financing and new interest that is emerging in this entire area. So we should all obviously get them to be part of the collective. And second is, I think in the trends, we should expect that the way government procures items, we haven't touched too much about that. I think that'll change quite dramatically. In the US, especially, that's imminent, but it's likely to happen around the world because the way government is a very important customer. And we have to be able to come up with new forms of procurement. This will, of course, have some implications on regulation, legislation, norms, etc. But yeah, I think we've run out of time, but I learned a lot listening to everybody.
Thank you so much to all of you joining from US, UAE, and Oxford. It was so insightful. I think I've learned a lot, to be honest. There's a lot more work to do to understand more how we can finance a space through CVC, through pension funds. Sanjeev will come back to you on this. But on behalf of Oxford Smart Space Initiative and Series and Said Business School, thank you so much for joining today. It was super insightful, and I'm sure the audience would want you back in no time. Thank you all, and see you soon.